Okay. Hello, everybody. Thanks for tuning in. My name is Matt Mickleborough. I'm host of the Junior Resource Investing podcast and Substack, hosting another panel here by 6 today titled Masters of Value, Thriving in Tough Markets. This panel brings together 3 recent major success stories from the junior resource sector. The junior resource sector itself is unparalleled in its ability to create and destroy wealth. This feast or famine nature of investing in a cyclical sector should be no secret to our viewers here. But even in the downturns, outstanding success can still be rewarded. Today's panel offers our viewers a unique and powerful opportunity to hear from 3 of the biggest stories in the junior resource sector of the past decade, to learn from their stories and gain insights into their individual strategies and choices that contributed to their success. Over the next hour or so, we will discuss their individual stories and experiences, dissecting the events and decision-making processes that contributed to their success. And perhaps in so doing, learn lessons to apply to our own investing in the hopes of finding the next major success story, even in a market as unforgiving as today's. Joining me to discuss their own success and how to identify it are Brandon McDonald, CEO of Fireweed Metals, Scott Berdahl, CEO of Snowline Gold, and Chris Taylor of Kodiak Copper, who, as you see on the nameplate, also apparently remains the president and CEO of Great Bear Resources. Gentlemen, thank you for joining me here today. I hope you're all doing well.
Thanks.
Hi, Matt.
Why don't we just jump right into it, right? I think the easiest place to start is just to start by telling us your stories. And I'll, I guess, gentlemen, just as we get going here, I'll take turns occasionally, asking just 1 or 2 of you questions. But I think this one, it would benefit for us to hear from all of you. Just tell us your story, and I'll leave it open-ended for you. How long did it take for you to find success? Do you want to discuss or expand upon any doubt or struggle or failures to speak of that you had to face or endure before your success came? And this question can be an open-ended as you want. This can be your whole career or just different targets before you hit your big discovery hole. Brandon, you want to start us off?
Yeah, I think rather than talking about maybe what it took for success at Fireweed, I would note that, when the market really went into downturn in 2011, 2012, there was some lean years in, 2013, 14, 15. I think one of those years, I literally didn't make enough money to be taxed. Right. So I paid 0 income tax that year. And there was there was a discussion between me and my wife about, do I persevere? Do I reinvent myself? Do I seek a different industry? And the decision was made, as the Colorado School of Mines recently called it, that mining was facing this gray tsunami, that there was going to be a shortage of people, that there was no escaping that it was coming back. Right. That whether it was a 2 or 3, or as it turned out, 8-year, or maybe 11-year and counting bear market now, it had to return at some point, right? So, a key component of the success, and I got introduced to the 2 original founders of Fireweed in 2016, was just being patient and accepting that it's a non-linear path, right? So I think that was a key thing for us. And I think it was by 2017 when we went public. In 2018, I was like, okay, this is legit. Like, I think this has changed the trajectory of my career.
Excellent. So pre-Fireweed efforts, and just that tenacity to stay in there. Thanks, Brandon. Scott, what about you?
Yeah, I mean, I can definitely sympathize with Brandon. It was a pretty exciting time 10 years ago. 12 and 11 years ago. And yeah, a lot of rough years in between. In my case, I started out prospecting in the Yukon, and Snowline was really an extension of that. My father dragged my brother and me out into the bush from the time we were little kids, and so we've basically been working the same package of properties for, in some cases, decades, and it's been about persistence on those projects. Of course, there are many that have fallen by the wayside, and knowing what to select and what not to, or at least, just keep pushing where you have good results. And yeah, no, we've kind of had an interesting trajectory where we finally got some traction, as did, anybody in 2011. And we're able to do some really big things with our portfolio and some ideas and that sort of a thing. But Brandon talked about a year without income taxes. I had a better part of a decade, just kind of trying to make something work. And I was actually just stepping down a totally different path, and had basically just given up on exploration, thinking like, what about an industry that actually, or a business model that actually has revenue? That seems really innovative. And so I was headed down that path, and then COVID struck, and so I was like, okay, well, let's see what we can do with these properties. Gold's doing something interesting. Okay, let's dust this off and give it one final push. And I'm certainly happy that not that COVID happened, mind you, but that I was able to get another push on these projects, and certainly that's proven to be pretty defining for the career and everything else.
That same kind of idea of just grinding, right? That dedication of time. Yeah. And Chris, thoughts to you?
Man, you're talking to three guys who have all been flat broke and chasing a dream, for many years of their life. Maybe we are not the best three guys that you could be talking to. I'd say, like, in the aftermath of the market contraction around 2012, I'd recently been asked to take over as CEO of Great Bear at that time. And I was up to like hundreds of thousands of dollars in debt, keeping the company going. And even to do the deal that we did on our Dixie project that ultimately, generated $2 billion of value. I mean, it was nobody would finance because the money just wasn't available. So I was in the same position like Brandon was just talking about. Like, I remember just anecdotally, I remember my son up in ski lessons and just figuring out at the time, talking to some investors, that there would be no more money becoming available. This was around 2012, and wondering if we could get the $60 back that we'd already paid for the ski lesson that day. So these are the kind of things, when you decide that you have a vision that you're going to pursue, you have to stick with that vision and make sure that you give yourself and your team the opportunity to make it come to fruition. And that's not easy to do in a cyclical industry like the one we're dealing with.
So, Chris, I think that you touched nicely on the next question I have for you folks, and I'll let you lead it off then, I guess, on that note. So how much does management skill or personality factor into a project's success? I mean, say that you could hypothetically give the exact same project, to 5 different management teams, ranging from best to worst, or overly emotional to not whatever, right? That 5 different points in the spectrum. How different would their outcomes be if everything else was equal, I guess, in that regard, Chris?
I'd say wildly divergent outcomes could be possible. One of the key roles as the CEO of one of these companies is to take a bunch of very divergent viewpoints on your board, like get people that actually would naturally fight with each other if you put them in a room, put them together, and kind of deal with that scrabbling, clawing, hissing ball of cats, and try to take the best ideas out of all of them. And, I would say even in the Great Bear experience, there's times where we had advice that we could probably sell the company at, $1.50 or $3 a share, $5, $10, and ultimately it was a $29 share price. And, you need a balance of people within your board, within your management team, that are going to be sticking in for the long haul, other people that are opportunistic, and theoretically, or in practice, in our case, you let them hammer it out, give you their opinions and ideas, and sort out the best path. Because if they're not an echoing chamber of agreement, you're going to have more access to a variety of ideas and get a better outcome for shareholders.
So yeah, disagreement and diversity of opinion will create strength for you, as long as you have the same vision, eh? And Scott, what about you? What are your thoughts on that one?
Yeah, I mean, as far as different outcomes, I agree that a lot of different management teams could set you on a lot of different paths with the same starting conditions. But I do think that there are also a lot of those paths could lead to success. There are a lot of different ways to skin a cat and to advance a discovery. And so I think you're going to see different styles from different companies and different approaches. But I think that it's important to see that a company is taking it seriously, that they're approaching things with integrity, that they're there to explore, that they're there to build value. And there are a lot of ways to do that. But of course, the industry has a diversity of actors, not just in the boardrooms, but just kind of across the space. And so I think that where we are right now, we're actually in a pretty good place, where it's been so lean for so long that most of the companies that are out there are here to do good work and to build value. It's been, the easy times have not been here for a long time. So, that's from one standpoint, that's a good place to be investing and a good place to be looking for new companies.
Interesting. I haven't thought about that the lean years can kind of wash out the used car salesman or whatever, right? And Brandon, what about you?
Yeah, I mean, look, I think fundamentally, certainly in exploration, it's either there or it isn't, right? And I think there's two kind of opposites of the spectrum that bad management teams can fail to find something that's there, and the best management teams will not find something that isn't there, right? I even amongst good management teams, there's coin flips, like two equally valid decisions, and you pick one, and what you're seeing here with this panel is kind of a survivorship bias of people who have, for the most part, in those coin flips, picked the right one, right? But you can have equally, or quite honestly, more talented management teams than certainly me who fail to succeed, not because the project's bad, just because they made good decisions that are bad with hindsight, right? So there's a huge element of luck. And Chris talks about resisting the temptation to sell, but there's also the opposite, right? For every Great Bear that resisted a $3 sale and sold at $29, there's a whatever that had a $29 offer and ended up selling it or going all the way back to 20 cents or something like that, right? So there's no one strategy, right?
So, you know what, you're going to make me jump around on my questions here, Brandon, because I think that you bring up an interesting point around, it kind of comes under what I was going to talk about with risk management. But you make a good point about just the luck and then, the macro events that you have no control over, right? So I guess maybe what I'll ask, and I'll start with you, Scott, here. How do you protect against things that are out of your control? How do you protect against the downside for your company, whether that's just macro tailwinds or headwinds, good luck, bad luck at the drill? What are some sort of risk mitigation factors that you look for in companies that you would invest in, or that you practice yourself, or that you admire?
Well, I think, one thing that we did in launching Snowline, we didn't really have a particular target to explore. We had more of a concept, but the concept was a big area with a lot of targets within it. And we basically brought a whole bunch of different properties to the table. And so, that gave us a lot of different things to try on as we kind of found our groove and found our way forward. So, so that was certainly a way to sort of mitigate the geological risk in starting out and launching. And certainly, from that, and that wasn't just picking and choosing, that was, again, like 30 years of winnowing down targets and picking what we saw as the best of the best and concepts and so on. So that was a good place to start. But even then, we could have gone through a lot of targets before hitting, and we were very fortunate to hit not only our first target, but to hit so well on our second target that we've sort of shelved our first target for the time being. And then we've been very fortunate in these markets to have that kind of success and to see that discovery can build value in apparently any market. And so from there, it's keeping a strong treasury so that you can execute for years to come. You're not going to be raising with your back to the wall, and I think that that's one thing that a lot of companies are obviously facing right now. Is they have great management teams, they have great projects, but just the market conditions are so tough that you just get stuck in this financing rut, and then people don't want to invest in that company because they're there, and it just kind of feeds itself. So that's not something that we strategically set out to avoid per se, but certainly having a strong treasury and being able to execute for years is key in these markets.
And so that combination of diverse land holdings or multiple targets plus the treasury, as you say. Chris, what do you think? Any color to add to that?
Well, I think there are great points Scott makes. We also need to remember that projects aren't marriages. You can fall into that trap as a geologist a lot of the time. You've got technical ideas that work out. In the Great Bear experience, we had dropped a whole series of projects that were our primary focus. So we tried a number of things. So there's like 3 or 4 of them in advance of the Dixie property. So you just have to keep sort of a discipline that you're not thinking emotionally about these things. And if they're not fulfilling the reactions that you require in the market for financing and continuation, you should definitely walk away. The other thing to do is keep a certain amount of cash in your treasury so that you can weather any kind of storm. And in my mind, like roughly you want to keep at least a year's worth of cash available so that if there is a sudden downturn or other unpredictable events, like we have a lot of those going on in the world right now, you can survive through that with your shareholder base, intact, your treasury, your company intact, and you can monopolize on opportunities that become available during those times.
And to you, Brandon, any additional comments to add to that topic?
No, look, I think of course, there's opposite ends of it. That if you try to raise to keep your treasury too healthy, are you over diluting, right? I think all of us are kind of the opinion that generally, what are the first 3 rules of running a junior mining company? Take the money, take the money, take the money, right? Generally, if the money's available and the source is not awful, I think the extra treasury doesn't hurt, right? I think 95 times out of 100, you won't regret that decision. And it's same with like project diversity. It's it can be a challenge to have too many mouths to feed and particularly in a bear market, right? But I think, risk management is a big thing in junior mining, and healthy treasury, some, if not project diversity, at least some pragmatism about when you need to have project diversity. Recognize that your project's heading for a potential cliff before the market does, and use your paper to conduct a transaction before your value, goes off that cliff. It's a bit cynical, but necessary.
Well, that's an interesting point. That balance between financing and infinite dilution, which is that spiral that Scott mentions companies can get trapped in. This is a follow-up question for all you guys, and hopefully we can get a little disagreement here and get some blood flowing here. What are your thoughts on streams and royalties? And maybe as an investor, why the heck would I invest in an exploration company if I can just get a nice little royalty company down the way? What are your thoughts from executives of Explorer Co's? We'll go Chris first for this one.
Actually, I'm glad you asked me, because we took both paths, right? We actually did spin a royalty out of Great Bear, and it depends on the context, right? Like, oddly enough, and I don't know how well people know this, but one of the reasons that I was very keen to do the royalty spin out from Great Bear was because at the time that we did that, the project wasn't getting taken seriously. And it was a mechanism, if I walked into a bank meeting, like an investment fund meeting, and people would be like, oh, I heard such and such, so-and-so told me something about your project. We don't really think it has, the merit that we're looking for. I said, have you really looked at the data? Well, not really. So the royalty spin out for us was a mechanism to make everybody, because they were going to get this royalty spin out, they had to take the project seriously, do deep dives in the data. And it was a turning point in valuation for us, because it made the industry as a whole take us seriously. And ultimately, at the end of the day, the royalty sold for $200 million. Right. Like, basically it was a very good additional benefit for our shareholders. So I like royalties if they're put on a project with the right context, and that ability to transfer the project into the serious state and a serious evaluation can be one of them. On the other side, like streams, like I haven't worked on a project that got to a stage that was advanced enough to institute a stream on the property. So I think I'd probably leave that to, maybe Brandon could talk about streams a little bit more. So there is a place for royalties under the right context, but the junior company itself, this is where, like you mentioned at the beginning, Matt, like, why do people invest in this business? There's so much uncertainty. There's so much volatility. Well, in a royalty company, if you put your money into that, you're very unlikely to see giant multiples on that investment. Whereas, you buy something like Great Bear in 2016 at 10 cents and you sell it for $29 a share, you've made a 29,000% return. So you'll never do that with a royalty company itself. So that's the reason that you can invest in the junior exploration sector.
Yeah, perfect. Yeah, Brandon, maybe I'll go to you. I mean, I think this balance between the necessity of funding versus that deal with the devil that can kind of start to rob an Explorer Co of its value. What are your thoughts on these things?
Sorry, 2,900%. I just did the math. Yeah.
Okay, thanks.
Sorry, go ahead.
Yeah, it's look, when it comes down to project finance, royalties can be your cheapest source of capital. You know, part of the appeal of a royalty company is their low risk. That lowers their cost of capital, and it means that it's also a very competitive space. So you get a lot of bids on any royalty or stream sale. By virtue of having a lot of bids, it means, like I said, it can be cheaper than equity. It can be cheaper than debt. Certainly should be cheaper than both, right? But the problem is that neither of those two impair the asset. Well, debt does, right? Because debt can take you under. But you have to consider that, right? And I think you have to always look at all the tools in your toolbox. I think at the stage we're at now, do I want to sell a stream or royalty? No. If it comes time to build, you know, one or both our projects, you got to take a look at it, right? Because there's always an offer you can't refuse. And I think that you look at the amount of project financing that have been done lately, particularly on polymetallic projects. There's almost always a stream sale on a byproduct, right? So I think it's become the norm almost.
Mm. Yeah, the polymetallic deposit, you're a little bit different than our other two gents here, right? Yeah, absolutely. Scott, what do you think, though, from your perspective?
Yeah, I mean, I think Chris nailed it from the investor's perspective, of just the rationale for going for one or the other. And yeah, you know, I don't have too much to add to Brandon's comments on it from the industry perspective, but yeah, I think it's really situational. You know, what your need is, what your paths are, where royalties are. I mean, they are subject to kind of boom and bust on a lesser scale. And certainly, you know, we've seen times when royalties are probably overvalued and times when they're not. And, you know, if you have a sense of that and what is being offered for a project, that could be a great way to finance. But of course, that comes at a price, and that price is paid by every shareholder forever, basically, through your production phase. But one thing I think is interesting is looking at byproducts, you know, that people aren't necessarily considering. And, you know, you might look at a deposit and start to see like, oh, you know, there's whatever element that we haven't really paid attention to in the assay sheets, and it's not economical on its own. But, you know, if you're to just skim this off the side, you could actually pay for a fair bit right now. And, you know, that doesn't really affect the story. So certainly keeping an eye out for, you know, for features like that in a discovery and a deposit could add value where there otherwise would be none.
Mm-hmm. And maybe I'll take this opportunity to kind of dovetail back to discussions around management. This is where this started was, and just one final question here for you guys. And I think this, you know, ultimately a lot of people listening here they want to learn what to look for from people who know what success looks like. And you know, you all kind of reference that there takes some luck, but obviously there's skill too, right? I mean, you are at the head of a ship that's going in the right direction. That people, you know, take heed of those sort of individuals. So I guess, again, you know, on your reflection of your own experiences, your own successes, and what you did or did not do to get where you are, is there advice you'd be willing to offer to people listening in terms of the human element, right? In terms of management, experience or temperament or actions, right? I mean, what would you offer to our listeners in terms of what to look for from that perspective? Maybe we'll go Brandon, you first this time.
Yeah, I'm going to buck the trend and go directly against the most common advice, which is not directly against it, but, you know, there's this advice that like bet on management teams that have done it before, right? And I think I'm going to at least offer a word of caution on that I think all of us know a lot of management teams in this industry for whom have had their big win, and the company is like it's not a lifestyle because it doesn't need them to pay their lifestyle, but it justifies going to the conferences. It, you know, keeps them busy, keeps them out of their you know, spouse's hair, right? So and sometimes successful management teams who have had success in the past, and it's not a life-changing amount of money that potentially on the table, may not have the hustle, right? And I think as all of us here can attest, unless you get extraordinarily lucky, it is a grind. And even on the steep part of the success trajectory, you know, as I was saying to someone, like this last year, we've had a lot of success, but I am busier than ever. And it doesn't feel like success in the moment, right? And if you have someone who's willing to take their foot off the gas because they don't want to put the effort in, you dramatically reduce the chances of success. So, I would, I guess the tip to the retail investor would be, does the management team have the energy level and the hustle to succeed? Because it almost always requires that.
That Stanley Cup hangover, eh? Once you're at the top of the mountain, that drive to keep climbing isn't necessarily there. Maybe, Brandon, not to put you on the spot, because I think it's valuable and sometimes it's difficult to quantify subjective things like you say, like that desire. But I mean, are there physical hints of that maybe if you're reading, if you talk to management or you read their headlines, are there hints to that you might be able to offer us, or what are your thoughts?
I think it's going to be very personal depending on the management team, right? I think you get access in this industry to a lot of management through conferences and calls. We're still small companies, so you can usually talk to the CEO, right? And I think there's maybe no magic checkbox or checklist to figure out that this person is hustling. But I think if you yourself are someone who works hard, you tend to know. And you tend to know the people who are a little too casual, right? And so I think that would just be kind of the tip, is like, look for the people it's not busy. It's not always about being busy. It's about who are clearly got a very high level of engagement, right?
Excellent. And Scott, is there a different angle on this question you can come from?
Yeah, well, I think Brandon hit the nail on the head there. But, one thing to look at, I suppose, would be the level of focus. And, when you look at a management team in the industry, you do see a lot of folks that are tied up in, 5, 6 different companies, even 2 and 3. I think it can be done at certain levels and by certain people, but seeing a group that is clearly committed to a set of projects. I know that kind of flies in the face of my diversification argument earlier, but that's within the company. We're going to make Snowline work, but when it comes to, okay, well, if Snowline doesn't work, we have X, Y, Z, and so on. I think that there's definitely value in that focus, and part of that too is the team that you have in management as well. And so you can have one person focusing on a project, and that's great. But if you have a group of dedicated, professional, hardworking people who are all focused on the same goal, that company is going to do a lot more than one charismatic CEO who has his finger in 5 different companies, or her.
Yeah, that ability to focus, right? And so, Chris, on to you then. Final thoughts on this one?
Yeah, I'd say if you're an investor looking at these management teams from the outside, the biggest red flag there is, and this supersedes everything else in my mind, is the CEO that talks about a quick exit for that investment. So there's a couple of factors there that the main one I think that comes to mind for me is that, 2 things. So there's a guy that says that, we're going to get some sort of fantastic return in a short period of time. He's really thinking that he doesn't have the long-term commitment. He or she doesn't have the long-term commitment to see this through. The other one is, we're all in the junior exploration business to basically sell companies, right? And if the CEO and the management team is messaging to the acquiring parties, the bigger mining companies, that they're in it for the short term, those mining companies know that they can wait them out. Whereas, like, if they're looking at long-term project development, like, sort of a very measured and logical build process, and, that understanding that there is time depth there, they're actually paradoxically going to move sooner to get that company before that company implements the project in a way that they might not necessarily like, and they have to undo work that they think they could have done better. So those are things that I would think about when you're looking at these companies from the outside.
Interesting. Well, I'm going to follow that up and ask the other 2 gents. Red flags, right? 30,000 foot view. You're doing your own due diligence as an investor on a company. I mean, what are some things that when you see that you just say thanks but no thanks and walk away? Do you have anything concrete, Scott? What are your thoughts on that one?
I guess one thing I would look at is that kind of, in as much as you can gauge it can be hard to tell, but yeah, lifestyle, dedication, focus. Really, if I do see somebody who's doing a whole bunch of different things, yeah, and you just, like Brennan said, it's a slog to make these things work. And you know, so just realizing that, and that's when everything is going perfectly. You know, for all intents and purposes, you're making good discoveries, you're drilling good holes and that kind of a thing. That's when the workload turns up. And so if you don't see that kind of dedication, then that would certainly be a red flag.
Brandon, what about you? Anything that just makes you nope out of the room when you see it?
Yeah, I think when I see or hear management teams that like the tail's wagging the dog, that like decisions are led with marketing that go into like the news flow, then the plan to execute to generate that, right? And that's ass backwards, right? Like you push the project forward on the schedule that makes sense, and the time, you know, like with the details to focus that produces news release, and then you plan your marketing around that, right? And I think that management teams that repeatedly engage in hard pushes on you know, through you know, various marketing efforts, some dubious, you know, that to me is like a big red flag of like, okay, that this is about the stock price, and the whole company behind it is an illusion to support a stock price versus a stock price reflecting the reality of the company, right? And I think that to me is a big red flag when, you know, particularly when people talk about they don't refer to companies, they refer to deals, right? And stuff like this. That this is like, you know, these are all kind of like these red flags of people who generate paper for themselves and then generate liquidity for them and their backers to exit, right? And not to say that sometimes you know, a bit of a, you know, deal with the devil to partner up with these people can be a terrible idea, but you know, if that's how the whole company's focused, then yeah, no, I'm out of there.
Interesting. So maybe I'm going to use that again as an opportunity to ask Scott and Chris about that. The idea of paid marketing, right? I mean, it is. I mean, is it a necessary evil? You know, is there too much, not enough? I mean, how much of that is a warning sign for you, or what? When you see a company, what's a healthy or unhealthy relationship with a company when it comes to paid marketing? Scott, and then Chris after.
Yeah, I mean, that's a really good question, and it's. Like a lot of the answers so far, there's a balance to be struck, I think, but there's certainly, you know, integrity to be accounted for, where I think there's too much in our industry where you see marketing that presents as maybe journalism without quite as big of a, you know, paid promotion banner as it should have on it. But at the same time, you know, you do have to, as a company, you do have to get the word out there, and often, you know, those are the channels that are available. So there's certainly, and then you've got to think about your own credibility too, as a company, as you're pumping your story, and, you know, how loud you want to go on at what level of results. And, you know, we've tried to just keep things direct, you know, let the rocks basically tell the story. But, you know, the rocks have been sitting there for 92 million years. So they need a little help from time to time. And so, yeah, I think there's a balance to be struck there. I do think that there are cases where there's way too much promotion, and there are avenues that you wouldn't want to go down as a company in terms of kind of over promoting and potentially even, you know, putting the wrong foot forward in the way that you present the story.
Interesting. And then on to you, Chris.
Well, there's a big difference between communication and marketing, and those are two very distinct entities. And like, if you pump a lot of money into marketing, you increase the volatility of your share price, right? So, you know, if you think about a share graph, you want it to go from, like, the ideal share graph is completely linear, and it goes from some value next to zero, where, you know, all the smart people buy just about every share, and up to some incredibly high value over here, and there's just no volatility in the middle. You do marketing, you get lots of volatility through that process, and excessive marketing turns a deal from turns a company, sorry, I almost said it backwards, turns a company into a deal, right? Something that you trade. Whereas what you want to do is build a loyal shareholder base that keeps the shares, and over time they increase the value. And so that's what we did with Great Bear. We took the method that, instead of marketing, I would put the slogging hours in, like Brandon was talking about earlier, like Scott was talking about earlier. And I did these lots of Bob Ross style artistic communications where you get leapfrog out and you're doodling all over the screen. You're just trying to make sure your shareholders understand the story. And if they understand the story and they keep the shares, you keep the volatility down and you can build that value over time. So, by the time we sold, I think we were still over 65% retail shareholder owned, so that was incredible. It transformed a lot of people's lives. And really that was because we focused on communication instead of marketing.
Yeah, I think I would just add that, it doesn't have to, marketing promotion doesn't have to be a dirty word, right? Like when done right, it should lower your cost of capital. But the key thing is it's lower the cost of capital to do what? It's to raise money to do the real work, right? Not to feed the marketing beast, right? And if you market too aggressive, as Chris says, you replace good shareholders with bad ones, because someone who might have held from $1 to 10 might sell at 180 if the jump from 1 to 180 is too quick, right? If it makes them nervous, right? If they see a lot of volatility, right? So you can't engineer a perfect chart, but you can understand that if you're already pretty choppy, it's not the right time to add fuel to the fire.
And so I'm going to keep going. I'll just remind the audience, happy to have questions here. If you're listening in, get some questions here. We'll have a Q&A probably in about 15 minutes here, 10 or 15 minutes. I want to, all three of you are discussing this and the issue of integrity, right? And I think that's kind of what we're circling here is this concept of integrity where, the company has to have integrity in terms of how they approach things, and pumping, right? Because pumping can be done by marketing, but also by companies themselves, right? And so I guess maybe the question I have then in terms of, again, trying to quantify a very subjective conversation is, what are some telltale signs that you get that maybe the company or a company is, whether it's from its news releases or how it reports its assays? I mean, what are some warning signs that you would get from a company that maybe they're not fully on the up and up, or as you say, it's more of a deal and less of a project, or more of, that short-term pump style thinking? Brandon, I guess, how do you feel about that one? Do you want to lead off there?
Yeah, I mean, anytime a company fails to discuss honestly risks, or is dismissive of risks, or is painting unrealistic potential outcomes, I think that's something to watch out for. I think all three of us here have been pretty good about being honest discourse, right? And that gives you the shareholder loyalty, even though short term maybe it doesn't give you quite the the initial buy-in, right? So it's tempting in your online town halls, or you're at your conferences or whatever, to just be a little bit more optimistic, but at some point optimistic becomes unrealistic, right? And it's a line to walk.
Interesting. And Scott?
Yeah, I mean, I think that Brandon basically covered it. Just getting into a place where if you see a company that, and this echoes back to the first or the last question of just where you've kind of doubled down on promotional efforts, and your stock price is way ahead of itself.
Well, maybe I'll try to ask you a more specific question here, Scott, if you don't mind. I mean, things that come to mind for me are, smearing grades, or not giving true widths, or even equivalent ounces. I mean, are there things in there that, and it's always, it's a tool that can be used or misused based on the owner, right? But are there things in there that you look for if you're reading in through a news release that you're thinking, okay, check one, check two kind of thing? Anything there you can speak to?
Yeah, I mean, when you look at that, I think those are excellent points. And one that from the exploration stage that this has always kind of bugged me, but again, I've also kind of used it, especially as a prospector, when you're just trying to show like here's the continuity of mineralization. But you have to look at it is when you zoom out and show a soil anomaly at like you know, at the 1 to 250,000 scale, and there's just this big red blob. But if you actually zoom in on that, you see like, okay, there's a high soil there, a high soil there, high soil there. You know, you have to pay attention to how results are presented in that way, and certainly having some technical expertise or advice, or just kind of digging into the data a little bit goes a long way.
Awesome. And now that's one I've got a quick follow up, but I'll let Chris get in here first before I pursue that one.
Yeah, consistency and transparent disclosure. Grade smearing is a big deal in our industry, where you have, you know, whatever, 10 meters of 10 grams can look very different depending on where that grade comes from, right? So it's one thing I found pretty funny looking at Scott's core back at the BMO conference. Number one, it was just incredibly consistent. So I was shocked and delighted to see that back when I looked at that stuff. And I think the finer detail the company can provide that shows that they're not smearing grades and selectively disclosing, those are good points that the companies can follow, you know, release to release and consistently over time.
And so, yeah, the question that came to mind while Scott was speaking for me was, you know, so much of this industry is so heavily technical, right? The geophys, geochem, that analysis. And so is there an opportunity for the layman or laywoman to achieve success? I mean, how essential is an advanced understanding of the geological side of things? How essential is that to success as an investor? And I guess, again, you know, maybe more concretely, if you're trying to switch from theory to practice, what do we do? You know, I'm not a geologist. I wish I was. I'm trying, but I'm just not, right? But like, how do I, as just a random Joe off the street, how do I find success in such a heavily technical industry? Maybe Scott, I'll ask you, just because that's where we were going from there, and I'll head to Brandon from there.
Sure. You know, and I think that I think getting some measure of familiarity is important. And there's a spectrum of deposit styles and types where, you know, even experts are going to disagree on what the merits of a certain discovery are. You know, you could get a huge range of disagreement on what's actually there based on a series of drill results. And then there are simpler deposits where they hang together nicely, and you know, it doesn't take much to piece it together, and everything in between. And I think that you know, without years of studying it and years of being on the ground and understanding these deposits, you know, you might not get there, but you'll get, you know, you can get pretty far along with just digging into a few books on you know, resource estimation, or just or digging into some case studies of companies that have done it. What did that look like? You know, there's some really good work. Mike Power from Silver Range put together a video a while ago where he just put, like, here are the footprints of a whole bunch of different deposits, and you know, this is what they look like. And so just kind of familiarizing yourself with that kind of a thing can be really valuable. And I think that was a really interesting example that Chris gave when he talked about the rationale for spinning out the royalty company, in that, you know, people just weren't doing the work, they weren't getting it. And so you know, the information was there, but the investors, even the technical investors, were not putting in the time to look at, okay, you know, what is this thing actually? Like, yes, that's a nice drill result. Okay, well, I heard this rumor that it's actually not a good drill result. You know, what about just actually looking at the data? And so, you know, you don't have to be an expert to just dig out the sections, look at the volume, look at grades, look at how things might be hanging together or might not be hanging together, and going from there. So I think it's kind of asymptotic. Like, a little bit will get you a long way, and to get, you know, into that upper percentile, you're going to have to spend years and decades, you know, breaking rocks all over the world. But a few books, a few articles, a few YouTube videos can get you pretty far, versus just blindly throwing darts at a very volatile and risky industry.
You mentioned something back there I thought was interesting. It almost mirrors our discussion around marketing, and sometimes you do need that story to get out right if people aren't getting it, that ability to amplify your voice. Brandon, what about you?
You know, I'm reminded of that expression of if you think you're communicating and your counterparty doesn't understand, you don't understand what communication means, right? and so this is like going way back to what we were talking about earlier about good technical communication and non-technocentric communication is critical. A good highlights to every news release, and as a retail investor, if you're looking at various companies to invest in and you're struggling to understand a company, if you're struggling to understand why you might buy, you're also going to struggle to understand when you should sell, right? So that maybe stick with the companies you feel are communicating well, understanding that you run the risk of people who are oversimplifying things. But there are lots of good people on social media who talk about these things. A friend of mine, no technical background, just got hired by a major in their Corp Dev team, right? Based on being introduced to him through his work on social media, right? So it's you'd be surprised how good amateurs can get when you put a keen mind into it.
Makes me feel better with myself there. Thanks, Brandon. What about Chris? What about you?
Well, just generally for investors, I'd say invest in companies that are run by the type of person you would expect to be running them. Like exploration companies should generally be run by geologists. Mining companies should generally be run by engineers, and companies that need to transform should generally be run by accountants and lawyers. And if you see a mismatch in any of those main leading positions, it's probably, a bit of a red flag. You don't want to jump in on something that's being run by, again, a promotional team primarily. Like, what you're going to get is a lot of volatility. So these guys that you've got, like, I know I'm actually in great company, like Brandon and Scott. I know Brandon quite well. We were in the same office for many years, and I've met Scott, and these are two of the smartest guys in the industry of their sort of age group that I know. So, have a conversation with the CEO of a company if you're really interested in them. And if they, kind of get the hairs up on your back because they're promising a bunch of quick returns and they don't seem to understand the technical material, I'd walk away.
Okay, well, good, guys. I have one last question here. I'll turn it over to the audience. I think this is one of those classic ones where I'm going to try to hold your feet to the fire and try to get a specific company out of you. But if you've got to defer, maybe I'll ask for just characteristics. But any picks that you want to give for companies that you think could be the next big success? Obviously, all three of you guys have a lot of success under your belts. What do you see coming down the pipeline in terms of other potential companies? And yeah, if you don't feel like you can, if you're just going to name your own company, right? Then tell me what are some characteristics maybe to look for instead. How about Chris? How about you?
I'm just going to get my stock ticker up here and see what I own. I would just say diversify, right? Like the major successes, like the companies, like if you look at a Great Bear type discovery or, recently a Snowline type discovery, they're not really predictable. Like you can kind of get a feel for they're in the right area, they're the right people, but you can't put all your eggs in one basket. So I just give you general advice. I can't give you a specific name, but you don't want to go all in on one name. It's not a healthy way to manage your investment income or your future investment income. So you want to diversify, and that would be the key that I would give you. And the teams that consistently perform, like always look at you have to look at these as an investor, as a stock. Like if you have a position in a company that's worth $1 million, would you take $1 million today and buy it at that valuation right now? Or would you maybe buy something else? And don't get caught in the trap that, you now own a lot of something that you wouldn't buy at that valuation again. So you want to make sure that you diversify at every stage in the process, even to some extent with your winners.
I think that's interesting. It kind of goes back to that survivorship bias that Brandon talks about. For every one person on social media that's talking about making 20 million bucks off a single company, there's 100 people that are belly up because they've lost everything, right? That diversification and risk management, right? Scott, what do you think?
Yeah, just to build on that or to kind of fine tune it, diversity is important, but I think being able to look at expected value, it's a tough calculation to make, especially in the junior mining space. But I had people in the case of Snowline, I had people telling me that they missed the boat at 45 cents. And of course I still have people telling me that they missed the boat today. Just looking at companies, looking at results and understanding them for what they are and where that puts the company, I would say, and now I'm going to put on my promotional hat here, but, I would say that the Snowline at 45 cents was a heck of a lot riskier in terms of an expected value standpoint than, it is today at $5 because, we have, if you look at what has happened in terms of our technical success and what we actually have in terms of the drill results coming together out there, sure, it's still risky, but it's not that proverbial 1 in 1,000 anymore. And so, yeah, you multiply the odds of success by the upside, and sure, we might not go up 20 times from here, but the chance that we are going to go up from here, I would argue, is a lot better than it was then. So yeah, just kind of being able to look at companies in terms of where they are on that spectrum, and I don't mean to just toot Snowline's horn here. I mean that just as an example where getting in there, understanding the results, that's key.
And Brandon?
Yeah, I have what would generally be considered a terrible investment strategy, which is I invest with friends. But that worked with Great Bear, and it's worked with other companies for me. And because we're lucky, because we're industry insiders, we're chatting to these people all the time at the conference. We're getting, Scott's talking to me about some other company over beers and yada yada. So you get a lot of intel that the average retail person is going to struggle to get. So I'm so busy. I don't have time to manage a portfolio. I do not trade. Most people try to talk about limiting themselves to I only should trade this much, right? Trading more than that doesn't make sense. I try to force myself to trade because otherwise I sit on my losers too long, right? So I force myself to make tough calls. But ultimately, I look for projects that have certainly for exploration, projects that have some merit. If I'm looking for that 10 bagger, it's got to have some merit. I have to understand what they're looking for. The prize that they're looking for, I have to have some sort of precedent that yes, that's good and that will transact. And then I have to believe the team has the brains and the hustle to make it happen, right? So, I think 2 recently that I own are like, Kingfisher, with Dustin there. He's done a great job. And Ridgeline with Chad, another great young geo who I know is onto something good and is super smart, right? So those, are they going to be successful? I have no idea, right? But I feel like there's, a good test for me is the gut test. Do I feel like a little bit yucky giving some of my money? And if I don't, then it's like probably the right move.
All right. So excellent. And then the natural follow-up here from the audience here. We're into the Q&A. So again, keep the questions coming. We got just a nice 10 minutes left. How active are you guys in the market? I mean, are you, active in the space in terms of buying and selling, trading, as Brandon says? I mean, do you have some favorites that you just hold long-term? How active are you in terms of your portfolio and investing in companies other than your own? Chris?
Yeah, I keep, it's relatively small positions, but I do invest in companies that like Brandon said, guys that I know and I've known for a long time. So that's an advantage that we have in the industry. Like I bought some Onyx recently, which is Darwin Green put that together, and he went to school with me. So, I mean, there are specific names. So I tend to, like I said, I follow my own advice and try to diversify with small entry positions. And as the company continues to do what it talks about, then I would, increase my ownership.
Scott?
Yeah, I'm closer to Brandon's boat here, where I just for a long time didn't have the money for a portfolio, and we still don't until we have some real success as a company. But ultimately, I've just had my head down and nose to the grindstone with Snowline for so long that I try to pay attention to the general markets a bit and to various companies just for benchmarking and seeing what else is going on and see what strategies are and that sort of thing. But I haven't found the time to try to put together a portfolio.
And then, Brandon, you kind of answered that one already. Well, questions here, still more coming in, some project specific questions here. Maybe I'll ask this later one from Nate. What do you guys serve in your camp at night for meals?
Well, I can tell you that I guess Chris at Dixie, was it people mostly staying in hotels and houses and stuff like that?
Yeah, there was not a lot of camping going on, Brandon.
Yeah. Whereas it's very different for Scott and I, because I got to tell you that you will have like an insurrection on your hand if you do not serve good food, right? In remote camps. So it's not something. The marginal cost of being cheap there is so not worth it, right? I think you got to have good cooks for sure.
There's a huge opportunity cost of bad food, right?
Well, and it's like and also, you know, you come to camp, and I'm sure anyone who goes on a site tour, you go into the kitchen, and there's always lots of fresh baked goods and stuff like that. And so every time I go to camp, it's like, why am I on my third whatever? I would never eat this at home, but you're in camp and it's there and it's fresh, right? So definitely a risk to the waistline, spending a lot of time.
Scott, what do you think about your dietary needs up there?
Yeah, I mean, we've got an incredible kitchen staff who work very hard and prepare 3 incredible meals a day. Every time I go there, it's like Brandon says, you know, it's hard to stop. But they've kind of set themselves. We started small, and they went all out for this crew of like 12 people, and then that became the expectation. So I kind of sympathize with them that now they have, you know, this crew of 50 people all the time, and they've set a very high bar. But nonetheless, I know everyone is super appreciative. And going back to investor tips, not that you can necessarily just wander into someone's canteen and sample the food, but you know, that might be another good aspect to look at to see how seriously the company's taking things.
And do you want to add more there, Chris, or do you feel like you got your shots in?
No, I think there's only so much I could talk about Tim Hortons and pub dinners. So yeah, it wasn't hard for our guys.
Yeah. Question from Dad's Rock for Scott. Just where do you figure you are, Scott, with Snowline? I mean, his questions around the Lassonde curve. I mean, how much meat on the bone do you think is left for exploration, and when do you foresee, line in the sand right now or planting your flag right now? When do you see yourself maybe transitioning to development rather than Explorco?
Yeah, well, I think there are kind of 2 answers to that question, maybe 2 different paths. One is Valley, where we've done a lot of good drilling. We still have a lot to figure out there, and we're still, we're still pre-resource on that discovery. But it's clear that there's a substantial gold system at Valley, and so I think that we have a long way to go there, just based on what we have, and what it looks like to us, and how it would stack up against other discoveries, and just what its NPV might come to be. And obviously, those are very forward-looking statements, but we feel very strongly about the Valley discovery, and we're very excited about it. But the other thing that does is it's a great proof of concept for the region that we're exploring in. We went out there in a very underexplored area. This is one of many intrusion-style targets. There are other styles of gold mineralization in the immediate vicinity or within tens of kilometers of there. It seems to be a very fertile area, and so I think we'd be remiss in just focusing on the development of that one asset, having discovered something like that so quickly, and just to say, okay, well, this is it. Let's hunker down. We'd also be remiss if we were to just ignore it and just continue to go and look. So that's a conversation we're having internally, and we still have a lot of room on the exploration side of Valley as we move it ahead for now. But in another year or 2 of time, it'll be come time to figure out exactly how to optimize the value of that discovery.
Thank you, Scott. And now maybe the last couple of questions here, and it'll almost be the flip side to what I just asked Scott here. He's coming at this from an earlier stage, obviously, than the other 2 gents. And I'm going to ask Brandon this question here from Will. What feature of Fireweed do you think motivated the Lundin family the most? I mean, what was it, do you think, was the deciding factor for them?
Yeah, that was a 5+ year conversation with them, right? And really it was there was no single moment, but I think it was the continued exploration success and that realization that there's a lot more there, right? And I think they've had so much success at the Filos, with the whole Vicuña district, which they split up because each project had its own merits, that you start to recognize, like, okay, this is like becoming something really, really big, right? And I think when they recognized that it was on that trajectory, that's when they got very serious about it. And I think that's, similar to something that, Chris went through and Scott's going through of that, as this, bigger sort of investors start to realize, okay, this is not a run of the mill. This is not a typical gold deposit or gold project or whatever. When now you've got people interested in it because they recognize that it's kind of like becomes a generational, near generational discovery.
And Chris, I was going to ask you similar things, but I mean, the exceptionality of that, of the deposit for Great Bear I'm referencing here sort of answers the question. So maybe I'll give you one last question here. We'll call it after this. Just someone asking, this is Nate here asking about Beaver Creek in specific, and also just the conferences in general. Speaking to you as a representative of Kodiak, I guess, Chris, and the last words here for you, obviously, how important are conferences to you telling your story? It's not necessarily accessible to retail all the time, right? How important are these conferences to you as an executive of an exploration company trying to make a go of it?
They're important for a couple of reasons. One is, as the executive, you get to read the body language off of your peer group and listen to the things they're saying when you're in meetings with each other, right? So Zoom has been a big help. 2019 pre-Zoom for me was just a nightmare of travel. It was about 50% travel. So when these guys were talking about having to put the grinding it out, when you're onto a major discovery, it was pretty brutal. So these conferences actually give us a mechanism to meet in person with the people in our industry and the people that are making decisions in the industry. And that's invaluable for really getting a feeling for not what's necessarily in the publicly messaged domain, but what you think these people are really thinking, kind of behind the scenes. It's not inside information. It's like reading the room. So they're really important for that. And then obviously, you can follow up with questions about potential deal flow, investor sentiment, like upcoming investor trends. If you're looking for projects in a company, there's really no better place to do it than where all these people with all these portfolios are collected in one place. And I would say that the executive for most even small exploration companies should be attendees at these things if they can be.
Excellent. Don't mean to cut you gentlemen out of that question here, but we are at the hour here, so I'll call it. Thank you, Brandon, Scott, and Chris. It's been a strong discussion. I hope that the listeners found this enlightening as well. Obviously, head over to their websites, Fireweed, Snowline, and Kodiak. Should probably need no introduction. As for me, Matt Mickleborough, Junior Resource Investing. Thank you for your time, and thank you for participating in this recording, guys.
Thanks, Matt.
Thank you.
Thanks, Matt.
Have a good day.